it's been a safe trade, and we're positive more broadly on tech, but we think there's going to be a divergence with these FANG stocks over the next year. And I think that the haves are going to be Apple and Google, Amazon, and even Tesla kind of entering that mix. And I think the have-nots are going to slowly emerge as Facebook and Netflix. And yes, it had a good day yesterday, but I think there's something structural that investors should keep in mind as they think about this basket is the reason why these stocks have done so well over the last couple of years is that they've been essentially grabbing new markets. So in Facebook's case, it was an advertising market that they were grabbing massive share. In Netflix, obviously, around video content. And Apple, Google, and Amazon had their respective markets that they were going after. But in the case of Netflix and Facebook, those two don't have these massive open-ended markets that some of those Apple and Google and Amazon have. And so to answer your question more broadly is that, yes, Facebook is a behemoth, $540 billion market cap, but I don't see outperformance coming from that name over the next year.
And so, but just to put a fine point on it, even the Netflix story and the Facebook story to some degree are quite different, correct?
Totally different, but they both share this idea of for those stories to keep going up, they need to capture some new markets. Now, they obviously have big markets that they're going after, but I think investors need some big kind of untapped markets, and the other names in the FANG group have that kind of growth potential.
And we're adding a T to that with Tesla?
Yeah, I don't know how you figure out the acronym within that, but Tesla's a much smaller name, call it a $60 billion market cap. Keep in mind that Netflix is up 80% in the past year. It's called $160 billion today. So, you know, it was part of the FANG when it was a sub-$100 billion market cap. But I think the critical part with the Tesla story, understanding that there are very polarizing investor groups on this, is that the June quarter and the September guide, I think, really laid the groundwork for this company not being in any sort of cash dire straits. And if, in fact, that's the case, that they can be profitable on the Model 3 and scale that, this is the best product lineup of any company if you think about their mission of accelerating the globe's adoption of renewable energy around energy capture and usage with the cars. And so I think that you are going to see Tesla move from this polarizing cult-like story to more of a mainstream accepted investment.
Gene, I want to go back to potential differentiation in the FANG names moving forward. Is whether a company is based more on subscriptions versus advertising also something that's going to be an important differentiator?
It definitely is, and I think that's plus for Apple in this case. Obviously, Netflix is an entirely subscription business, but again, to keep in mind with Netflix, they don't have new markets. They're not going to go after self-driving cars and healthcare and some of these massive untapped opportunities. So yes, subscriptions are important. A quick thought on Apple as a subscription, and we have this belief that there's a paradigm shift going on in terms of how investors are thinking about the Apple story. And more broadly, we're referring to it as Apple as a service, and that's not reflecting their services segment. This is the concept that the hardware is actually performing like a subscription, is that every 3 years people show up and buy their iPhones. And if, in fact, that's the case, I think that the multiple on Apple will go up. So, yes, services subscription is critically important, and I think Apple actually is emerging as a leader in the services segment.